So my name is Julian. I'm the CEO and co-founder of Akru. And with me also is our co-founder, Chong. Both of us started Akru, founded the company in 2017, which coincided with SC's guidelines for digital investment management. About 3 years later, we got the license and we went live with the website, akrunow.com. And so today here, I want to make the case for why you should invest with Akru. And in fact, this is our second round with lead capital to raise money and explain why and what's the difference between the first round and the second round. All right. So, oops, is this working?
Yep.
Yeah. So this is just the background. Basically, Akru is what is called a robo-advisor, all right? And robo-advisor is not a new concept. It's been in the United States for maybe 10 years. And the whole idea of robo-advisor is based on passive investing, which I'll explain more later. But what we offer is through the way we do things, a very much cheaper way for people to invest much quicker. And out of it, they will also get better returns from, let's say, the unit trust industry. Oops. Where should I point? Is it here? Or? Okay, so here's the problem, yeah? People don't know how to invest. We are going to help them to invest. And in particular, they don't know how to invest for their retirement, their kids' education, and so on. It's not an easy process. It's very complex. You've got to do the math on how much you need to save to, for example, arrive at how much money that you need to have by age 65, make that money last for 20 years, how much you can spend a month, and then work backwards and translate it back to today, how much you should save today to get the right investment nesting. And so the current solutions are very poor, they're very costly, they don't really allow you to make good decisions, so that there is choice paralysis. There is no customization as to what you want to do. It's all lumped together, right? You don't know whether you're saving for retirement and kids' education and so on. All right? But the main point here is the cost. This thing is not working very well.
Okay.
Got a point there, is it? Sorry. It's not working well. It's kind of like
You need to tap on
stopping
it. I think it's not selected.
Okay, why don't you just okay? I'll let you know. Yeah. So the solution is that Akru invests for people to fulfill their financial goals. Next. Let's skip a few. Can we go next? Okay, so here's our business model. We charge 0.7 on the total amount invested, and then we charge a 10 ringgit account opening fee as well. Next. Now, this is one of the main slides. You know? By the way, we're still on the background, so I just want to move very quickly here. We are very, very cheap compared to traditional ways of investing. All right, if you look at a typical unit trust, whether it's sold to you by an agent or you go online to buy unit trust, you firstly have to pay a sales commission. And then after that, every year they would charge what are called fund expenses, right? Annual management fees for your unit trust, which amount to 1.5% to 2%. You subtotal that, it comes up to 4.5% to 7% for an agent-driven, and for online maybe cheaper. And then when you want somebody to provide you the human touch, to tell you what to do, which is a good service, right? It's a professional service. You add around 1% over what you have invested in, right? And in 1 year, you get to see that this is very expensive, right? If you look at annual stock market returns, you can say that the average returns are 8 to 10% per annum, right? So this is almost like 1 year of the average of the stock market return, right? So if you look at Akru, we don't have any sales charges. Our fees are very low because we invest in ETFs, and we do charge a fee for ourselves. We need to make money to cover the service and to cover costs. And therefore, the comparison is that our pricing and our proposition is only a fraction of the industry. Next. So how we keep costs very low? One is passive investing. Now, I just want to talk about passive investing for a moment, right? What you believe about investing all this while is wrong. Okay? They don't really get you the returns that you want. The reason is that active fund managers, now we call ourselves passive, yeah? Active fund managers underperform the benchmark. So for instance, Malaysia fund manager would compare themselves with the FBM KLCI, right? Now, that fund manager on average has underperformed the FBM KLCI for the last 3 years, 5 years, 10 years, 15, 20 years. So if you are planning for your retirement and they are underperforming the FBM KLCI for the last however many decades, your retirement planning would be out of whack. And you might not get as much money as you want for retirement. Right? So if that's the case, then the question to ask is, why not just buy the FBM KLCI, right? And so that's what Akru is doing. Akru is managing your money by buying into market indices or market representatives, right? But it's not all. Malaysia as a market has done worse than the global markets for the last 10, 20, 30 years. And that's even before factoring in the very weak ringgit, right? So every decade, the ringgit weakens by 1 ringgit against the US dollar. So if you factor those things in, the proposition for your investment is very clear, right? You've got to channel a big amount of your funds to passive investing in global portfolios, right? You can play around on the margins if you want, right? Let's say 100% of your funds or your wealth, you can invest in crypto, you can invest in unit trust, you can buy stocks that you like, or you can invest in ECF, right? Like where we are today, right? You can buy into ECF. But to protect your wealth, your core wealth, you have to be exposed to the movement, the innovation, and a global economic policy. If you do not, then you start losing out as far as the average returns, average global returns are concerned, right? You're not getting the kind of returns that, let's say, Facebook or Amazon or Samsung or any of the motor companies or healthcare, health tech, wealth tech, insure tech, all these companies that are listed will represent growth for your money. So you've got to, there has to be a way to get into those investments very easily, and Akru right now is providing the answer, right? Can we go next? So here's the long-term impact on fees by our calculation using very objective numbers from the market. The difference is about 30% between traditional solutions and a robo-advisor service like Akru. Next. And the phenomenon is not just, the phenomenon of underperformance is not just Malaysia, it's global, right? In the United States, between 70 and 90% of fund managers who engage in active management underperform their respective benchmarks. Next. Next. So here is how we construct the portfolio, a very quick one. We sort of silo your needs, like retirement, education, and we're coming up with more goals into different risk profiles. And when the customer comes into the website, we will risk profile them by asking them a few simple questions, and in a matter of minutes, they will get invested. And this is very important because there is a huge mental barrier to investing. right? People don't wake up to say, oh, what should I invest in today? In fact, people wake up and say, I still haven't sorted out my investment and I don't know where my retirement is going. Right? So to eliminate the mental barrier is actually very, very important, and I think that the modern fintechs do that. All right, next. Next. All right, so here's Akru's portfolio performance in 2021. Our highest risk portfolio, which is P10, achieved about 22%, which is almost exactly the same as what the global market achieved, right? We're not saying that we will do better than the market. And with this kind of performance, we actually beat 90% of the unit trusts that invest globally in Malaysia, around 90%. Not because we are good, but only because by virtue of the fact that we are passive. We don't try to increase our costs. We don't try to get in and out of the market as a normal fund manager would do. And therefore, just based on passiveness, we beat 90% of these of that crowd. Next. So just to talk a little bit about the market opportunities here, it's huge. The current amount of money that is invested with robo-advisors in Malaysia is around 1.5 billion ringgit today. But if you look at the kind of money under management today in the industry, you're talking about 500 billion ringgit in unit trust. And remember, the unit trust is very expensive, they're performing poorly. There's 1 trillion in the EPF, and we would want to lobby with EPF to open up, to allow the money to get out to unit trust, to robo-advisors. So right now they have a scheme under iInvest that allows you to take a part of your EPF savings to invest in unit trust, right? Why not robo-advisors? Robo-advisors are very well suited for this kind of thing because we know retirement very well. They're extremely cheap, so our interests are aligned with the members. Because EPF manages your money for almost free, right? And Akru will also be managing, if we are allowed to, EPF's money for almost free. So we are a very logical proposition to EPF. And not to mention the 2 to 3 trillion ringgit idle money that's sitting in current and savings account, right? You may argue that a lot of this money is sitting in there for various things, okay? Like maybe working capital, maybe a rainy day fund. But it's 2 to 3 trillion doing nothing, right? So even if a little bit comes into the robo-advisory industry, which right now has only 1.5 billion ringgit, it is going to just boost the robo-advisor industry, right? It's very sensitive to just very small movement of funds moving from traditional sources to robo-advisors. We are also going to the Sharia market, which is a huge market in Malaysia. I think the Sharia market, even for fintech and wealth tech, is underserved. And Akru would want to have a go at that. I think we would be quite successful with that as well. Next. So here is the competitive landscape, right? Basically, you can split the industry into high quality advice and how much you need to pay for that. And the quadrant that you want to be in is the top right quadrant, where fairly high quality advice, investment advice, is given at a cheap pricing. Okay? You certainly don't want to be in this quadrant, where the fees are very high and you're not getting your money's worth because your funds are not properly managed. All right, next. Here's the trajectory for robo-advisors in various places, Malaysia, Singapore, and the US. The US is already 1 trillion under robo-advisor. Singapore and Malaysia, dollar for dollar, 1.5 to 1.6. But you can see that the growth trajectory is very strong. So there is no reason why we wouldn't follow that kind of trajectory. Next. Next. Yeah, I just want to show you this, which is the Fund Supermart landing page. And it's very impressive. Okay, it's very sophisticated, it's very technical. But when you go in here as, let's say, a Grab driver, or or a Starbucks barista or an architectural graduate, right? Do you know what to do? No way, right? So this is for professionals. Next. So this is Akru, and you go in here, we are basically selling aspirations. We're selling something that people would understand, right? You have a need to fulfill your retirement, we want to fulfill that. It's a very direct access. All right, next. So this summarizes the differences. We are straightforward, we are plug and play, we are very low cost. You can DIY, right? Whereas in the sophisticated market, I think the business proposition is kind of vague, and therefore they would still need a professional to guide them, and that means more expensive. All right, next. And here is our pipeline. We are talking to a lot of people, and here is where it's different between ECF 1 and ECF version 2, right? Which is right now we are asking money from you, and basically only for this crowd. We don't want to publicize actually a lot of this sensitive information because they're still under negotiation. But we are pivoting from a kind of B2C model, which we realize the customer acquisition cost is exorbitant. Right, so why not work with people who have already acquired those customers and share the fees with them? So as we speak, we are about to sign 2 MOUs. One with a very strong and very established independent financial advisors who is also very confident of channeling AUM into us, right? So by next year, and this is the AUM forecast, by the way, AUM, assets under management, our forecast for assets that we're going to manage by the end of 2023, and these are numbers that we have submitted to the Securities Commission. Now, the Securities Commission takes a very close, they like to look at this very closely for obvious reasons, right? They want to make sure that the whole financial ecosystem is sort of stable, and they want to make sure that we are sustainable, right? So we submitted a business plan to them, and we had told them that the target of AUM for next year, by the end of 2023, would be about 300 million ringgit, right, from nothing today. So this is where, you know, we made a decision to talk to angels only for the moment, right, because we didn't want all these sensitive and strategic information to go out there at this point in time. And the breakdown of that is that around 50 million would come from B2C, right? Half, like equally split between conventional investing products and Sharia, right? So we're launching Sharia, we're very excited about the Sharia product. And then another 250 million would come from our B2B affiliates, right? It's actually effectively B2B2C, because these guys, the partners, are in control of a very good consumer ecosystem. So we are very excited about that, to form partnerships like that. So, and with 300 million, you're probably going to be asking about what that means, right? And I think that at the back of your minds would be the question of exit, like how, whether it's exit through a bump in valuations or an actual exit through an IPO or whatever. See, if we, the situation with the crew right now is that we want to get to the level where we would be able to talk to VCs, right? We are in contact with VCs all the time, but they say that we are too early for them. And with 300 million in assets under management, we feel that we have a chance of talking to them, and in that process actually getting a bump in valuation. All right, next. So here's the Sharia approved letter from our Sharia advisor. And certainly this is at the top priority to launch this ASAP. Next. Yeah, I talked a little bit about this, but I think Akru doesn't want to stay as pure investment managers. I think investment management is a launch pad to many things, including the kind of aspirations that the digital bankers will have today, right? And also investment as a service, right? IaaS, where we can offer onboarding services to other fund managers who will pay us good money for that. We can work with perhaps P2P players. You can see that, I think I saw that when Pitch themselves went for an ACF on lead itself, they saw that deck, and they had similar things that we want to do. So I think there is a convergence of the activity of both fintech and also the neobanks and the digital banks, right? The activities are kind of converging, and Akru can either be part of that jigsaw puzzle or be the guy that puts together the jigsaw puzzle. Insurance is the other thing that offers a lot of potential. If you look at the financial planning spectrum of services, the main services are investment advice and insurance advice. Okay, so if you have these two, you are basically covered for a major part of financial advisory. Okay, so we have very strong views on both investing and insurance, and we want to sometime in the future go into that insurance business. All right, next. Yeah, can we just go to that one where we highlight the? Can you just keep going until I say something? Yeah. Okay, stop here. So the other question that is very often asked is, what's the difference between us and other robo-advisors that are in the market at this point in time? And the first thing I want to say, before even going into the details of this slide, they are not our competitors. We don't lose sleep over them. The main competitors is the unit trust industry, because that's the most lucrative market. But if you put a gun to my head and ask me to answer a question, then here it is, okay? The first thing is that Akru is totally passive. Some of the other robo-advisors are slightly active, okay? And the problem with some activity is that they might not be so reliable, right? Because you are placing your trust on the human fund manager, what the flavor of the month or the flavor of the year is going to be, right? But Akru doesn't make that kind of decision for our portfolios, and therefore we are totally passive, and because of that we are able to deliver the satisfactory and reliable returns for planning that the market offers you. Secondly, we are goal focused, meaning we allow people to set up financial goals. Stashaway is the only other platform that allows goal setting, right? Akru is the other one. We are Sharia, we're going to be Sharia enabled, and within Sharia also we feel that the ability to goal set compared to other Sharia players puts us in an advantage, right? I think Wahid and Raise don't allow goal setting. So when we come in with a Sharia product, they will also be exposed to those kind of benefits. We are totally global. We don't focus on Malaysia at all. This doesn't mean we are unpatriotic, but what we want to do is just to go directly global, because we feel that the global portfolio, which invests according to the most successful economies, would be a better way to invest, rather than start with Malaysia. We think that that's not very good investment management. All right, I think that's, so a few key differences there. Totally passive, goal setting, and totally global. The other thing is we don't use unit trust at all. The moment you step into unit trust, your costs go up. So we have 0 unit trust compared to some of the other robo-advisors that raise has a unit trust underneath it. Okay, so there are hidden costs. It's very expensive. All right, next. These are our financial forecasts. The difference between 23 and 22 would be the AUM targets of 300 million that I told you guys about. So it will translate to revenue of 2.1 for 2023. And one aspect of whether it's bank accounts or investment account and things that accumulate money, right? Even your e-wallet in a touch and go, actually it's laziness. The moment people put money in, they wouldn't take it out. Very, very few of them actually take out the money. Right? You probably would have the same experience with your own accounts. Right? There's hardly a lot of churn in it. So the point of this is, the revenue is based on something that is exponentially accumulating. Right? First year you have 200, let's say 300 million. In the second year, if you get another 300 million, you're earning revenue from the previous year's 200 million and the current year's 300 million as well, right? So if you're in operations for 10 years or 5 or 10 years, right, the exponential growth in revenue is very sharp, it's very significant, right? Because it's just driven by laziness, I would say. So 2025, we'll probably break even, and then net profit would continue to grow with a stabilization of AUM accumulation. All right, this is our team. Next. We have years and years of experience together with our investment advisors and directors as well. Next. All right. So far, we have raised about 6 million, including the around 1.5 million from ECF round 1. And this round, we are asking for another 3 to 4 million. We already have perhaps 1 to 1.5 million secured as cornerstone investors. And we have a deal for people who want to be part of the cornerstone investor. I'll let Chong Leong give you more details later, where you can buy at a cheaper price. All right, next. Yeah, so these are the terms. Chong Leong, you want to say anything about this? Okay, next. Yeah, so this summarizes our dream. We can either be the boss, or we can let someone else be our boss. But I think financial, fintech, wealth tech, insurtech, they're converging. You know, and a business becomes very valuable if they're aware of what can be done to be part of that ecosystem, you know, and if they are leaders of that ecosystem. So if you have a lot of ideas, if you have a proposition that is quite revolutionary, I think we can together be part of this, to me, very, very high growth. All right, thank you. That's all from me. Happy to answer any questions.